This is Alan Bush with the Daily Financial Forecast for Thursday, October 25th. Stock index futures putting in a rather weak day yesterday, to say the least, but good recovery gains today. Much of the recent pressure that we did see in the indices linked to a variety of geopolitical problems, including the isolation of Saudi Arabia, worries that the Fed might be a bit too hawkish in raising interest rates, the Italian debt situation. However, I do feel that the Fed will respond to this and ultimately start scaling back some of its hawkish rhetoric, and to the point where the Fed most likely will be less aggressive in raising interest rates next year. That, I believe, ultimately will rescue this stock market, futures market, and ultimately take the futures higher. Moving over to the currencies, really don't see any interest rate differential advantages in either direction. Those central banks that are hawkish are likely to be less hawkish, as in the case of the Fed. Those central banks that are accommodative are likely to remain that way. So I basically see a sideways trade in the dollar and the euro currency because of those interest rate differential expectation considerations. However, in the interest rate futures markets, after being bearish for quite some time and seeing lower prices, I am now only neutral. My reasoning is central banks cannot be as aggressive in raising rates, and I'm mainly referring to the Fed. Other central banks that had planned to raise interest rates next year will probably be forced to delay rate hikes. So that is supportive to the interest rate futures markets. At least we can no longer be bearish. Any shorts you have should be covered in the credit futures markets at this time. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.